Bitcoin breaks 115,000. Ethereum reclaiming 4,200. Altcoins are finally starting to wake up. We got the total crypto markets that are in the green today, with total capitalization back above 3.9 trillion, up about 3.3% in the past 24 hours. Now, before you FOMO in, I'll show you what the institutional order flow is really signaling, how to position before the next rotation wave, and where the first cracks could appear if this run overheats. Welcome back, Crypto Crew. It's your boy Tom here, bringing you the hottest in Bitcoin and crypto action. If you like what you see, give us a like. Make sure you hit subscribe if you have not already. And make sure you come on over to X and follow us on X, where we talk about Bitcoin, crypto all day, every day, because we are crypto maniacs. All right, let's break it all down for you right now. What's happening right now in the marketplace? Well, we talked about this before. We got Bitcoin that basically was at the make or break level. 5 rejections in the past, now holding support once again. We believe it's classic accumulation. There's zero weakness right now, maximum opportunity, and I just hope, which is not a strategy, that you didn't sell the panic support button, okay? Now, let's get into the 2-hour chart in Bitcoin, because this is the all-important little chart that we like to refer to in the short term. Had the short-term support for you right here. Markets coming up and actually broke up through the top of this box right here. Now, before we just jump in and say, hey, this marketplace is rip-roaring, we got the clean extension from, let's say, the 110 level right now. And right now, as it stands, we got a classic liquidity sweep that's occurring right here. Okay? That's a classic liquidity sweep. So we got to be on guard right now. So what the question is, really, with this liquidity sweep, was it the big boys feeding the ducks as they were quacking? Or was it the big boys grabbing more in a reaccumulation? That's the real question that everyone's asking behind the corporate closed doors this morning. Was the move to 116,400 the big boys feeding the ducks, selling into retail euphoria? Or was it reaccumulation by the same institutions that just scared the duck feathers out of everyone 2 weeks ago? Well, on the street, we used to say, when the ducks are quacking, you feed them, right? That's the classic Wall Street saying. So, well, okay, for those of you that don't understand, all right, but really it just means when retail traders start chasing green candles and shouting, we're going to all-time new highs, smart money starts unloading inventory. Not because they're bearish, no, but because they can sell size into emotion and buy it back cheaper. That's the whole, they can't move. They can't move in and out like we can. You got to think of them as like battleships. They can't just turn like a Corvette or a Porsche or, a Lambo. They can't turn like them, right? A battleship takes like about, I don't know, 3 minutes to make a turn? I mean, so really they can't do it. So this time, really, it doesn't really quite smell like full distribution to me. Why? Because the liquidity profile tells a different story. When you zoom into the footprint data, you're going to notice that there were limited bids still parked below 112,000, meaning the same hands that sold the pop are still waiting to buy with orders underneath. Okay? That's not distribution. For me, that's reaccumulation. It's how the desks can reload inventory without signaling intent. All right? Now, of course, they sold it, they will buy it back, obviously, right? So we got to be, if you're short right now, okay, at 116, say even, it's 115 right now, but just be cautious with it, okay? Because, the big boys, they're not going to let this thing run away from them, all right? They sold the pop, okay? They're basically thinking that they can get, as I said, you'll notice like limited bids still parked below 112, all right? So Really, it's how the desk reload inventory, right? As I said, without like let anybody know that they're trying to do it. So they shake out the late longs, they reclaim liquidity, and you know what do? They market higher once the market's thinned out. Because I just said, like, you got to think of them like battleships, not like, Lambos, not like Lamborghinis. They can't chase breakouts like you and I can chase breakouts. So what they have to do to move size, you have to engineer liquidity. Okay? They'll push price into obvious retail breakout zones, triggering stops, and then use that flow to quietly build positions. Once again, volatility compresses. I mean, I used to do it all the time. I hate to say it, but I was like it was real easy to do it. Like if, say, for instance, dollar yen was rallying, and I had a customer that had interest to buy it, on a breakout, right? So what I would do is, we'd have the sales force call them and say, guess what, dollar yen's 10 pips away from your breakout. Do you want to buy it? Meanwhile, it already hit the price and it came off. So yeah, get me in. Okay, here's $50 million at 30, right? And the market's trading at like 19.22. Okay, but the high print was like 42. So when the guy goes back later and says, "Oh, I got him at 30. The high was 42," he feels pretty good about it, even though it was a shady thing to do. But that's what we dealers do. That's what we do. It's how we make our money. So look, so the real tell isn't really the price. It's going to be the reaction after the spike. So if Bitcoin collapsed under 110 and volume vanished, that was distribution. But that's not what happened. But right now, if it holds the floor, drifts sideways on light volume, and volatility bleeds off, that's a classic Wyckoff phase B reaccumulation, which I think it is, as buyers defended so far every dip below 113, confirming the market has still got some gas. So now the question is whether we're going to consolidate here or if that 118,000 level becomes the magnet. That's the question. We got another tell that institutions aren't chasing. They're accumulating quietly on pullbacks. If you looked at over-the-counter desks, they saw size going through on Thursday and Friday. This was, we saw this then, and we basically were saying that that's why Bitcoin could actually hold the line here. All right. So size was coming through on over-the-counter desks. So it wasn't retail flow. It wasn't hype. It was balance sheet positioning. So that's telling me that the next leg is not going to be driven by emotion, but by allocation. So if Bitcoin holds above, let's say, the 110 that we have here as that short-term support, okay, the path of least resistance is higher. First level is going to be the 118. Okay, it's going to have resistance there. All right. Of course, we still have the resistance right at the top of this box as well, 116. So let's say we got to clear 116 first, then we got 118 right behind it. Okay. Now, if we slip below the short-term support, that's where the flush could trigger targeting, like, right back down to them damn lows, right down to the bottom of this box again. But it looks like it's quietly stabilizing. All right. So I know I'm spending a lot of time on the short-term chart, but I want you to see this. Okay. It's very, very important because you got to understand when Bitcoin looks loud, pros trade quiet. That's where the edge lives. Okay. Now, we still have that potential bloody double top. All right, before we go, all right, let's get the points up right now. All right, so we got 116.4, right? So I'm thinking the 112 actually should hold. This level should hold. So what we could potentially get is we got this, where actually I think the big boys sold into it so that they can actually buy coin back down here. As I told you, the bids are sitting there. Now, that level holds, and then we take this top out again, we're going to be attacking like the 118. So we should be trading in between like 116, 118, and then finally, if we can get above the 118, then we got the 120 in sight. Now, a lot of analysts are going straight to 120. I don't believe that. I don't think it's going to be that easy. I think there's still going to be a lot of bears defending the line. Now, as I said, Let's get over to Bitcoin. Like we still have this monster hanging out in the marketplace right now. All right. So with the double top is still the ghost of the market, right? So we haven't cleared it. Although Bitcoin has definitely defended the line, great. We're still not out of the woods. Okay, the potential is still there for the big boys to come in and do one more, you know, break the glass, scare the heck out of people, to push down again to try to, rob bags. They're in the business of trying to steal your coin at a cheap price. We're in the business of trying to help you out. That's why you got to get into our pro group. I'm going to tell you something. I'm going to give you one setup that they used in our free community, and people banked coin off of it in Ethereum. I'm reading the comments. Some guy made $13,000. $13,000. Woohoo! Congratulations to whoever he is. Now, we gave him the levels, we gave him the idea, the guy took the trade. So therefore, everything, goes to him. Big outstanding round of applause because he actually had the chutzpah to take the trade. But I'll show you that in a second. So you got to get into our community, man. And I'll show you how to do that later. But right now, the potential double top is the ghost of the market. But as shown before, okay, in our first chart, Bitcoin did hold the line. It held it. So now this guy is still there. It's still haunting us. The only way we could clear is if we get out through that top. Right. But we've also seen this kind of before. Excuse me. Why am I sounding like that? Okay. If we look from panic to parabolic, the COVID crash of 2020 gave us the blueprint. Now, that crash was massive. It really, the tariff crash wasn't really as deep as this, I don't believe. Okay, we went from what? 10 to 7,000. So here, now we got to understand that this is totally different because of the amount of the coin, the price of the coin itself. So basically, probably it's about the same amount as far as percentage wise. I'm not going to do the math, but the point is this, that COVID crash in 2020, once we broke out above, it was a 600% rally. Right now, with this tariff crash, we have the same structure, got the same emotions. We got people, on our YouTube saying Bitcoin's going back down to 30,000. It's over. Oh, forget it. You have no idea what you're talking about, Tom. People saying, Tom, you're always wrong. Like, are you kidding me? Okay, listen, this is a thankless job because when you're right, nobody remembers. When you're wrong, it's the end of the world and you stink. That's the way it goes. It's like, I don't know. I don't want to say it. Having like a narcissistic girlfriend or something. It's horrible. But anyway, so really you can't you can't confuse shakeouts with trend reversals, right? So if we get above that top, we could have the biggest move ever because biggest moves come after fear. And history rewards the brave. Okay? And I showed you this before, and this is going to get the bears absolutely going crazy. They're going to get the bears all fired up. Two charts I'm going to show them that's going to get them absolutely fired up, angry. All right? Look at this. Excuse me. Bitcoin's super secret, super signal just fired again. MACD crossovers predicted every pump. Just happened again. Now I know people, if history rhymes, I know people don't like to hear. I've read the comments, bro. I understand. But how else you want us to say it? History, it doesn't repeat, it rhymes. I know you're tired of hearing it. I'm tired of saying it. But it's the only way I can get the point across. It's the simplest way. Okay? So what we're basically saying is the past is sometimes prologue, but it's not always perfect. Right? It's never always perfect. If it was perfect, there wouldn't be a market because you could go back and go, well, that happened before at that price, so therefore I should do this at that price, and that's what's going to happen. Well, then there would be no market, right? And the volatility and the confusion is the beauty of the marketplace. And that's what it comes down to. It's the beauty of the marketplace. So anyway, Bitcoin could explode one more time. So the question is, are you in position? We're thinking that it's going to go. That's why we say get into our pro group because Look, I'm telling you, one guy made 13 grand. Now that's one guy, okay? It could, so it could be a bunch full of duck feathers, but I don't think so because they communicate back and forth in the trading room or the trading group all constantly. So they do say what their positions are. So no, this is the one the bears are really going to hate. This is the one the bears are going to hate because we are in Bitcoin's favorite quarter. This is what it is. Now, I'm not going to do the history rhyme thing, but look, we're into Bitcoin's favorite quarter. Q4 in 2024 delivered an 80% run. We got the same setup. We got the same window. Yes, we got the same opportunities. It's not luck. It's the cycle that builds fortunes. The countdown to liftoff has begun. Now, I want to get into Ethereum. I'm going to hit Ethereum hard because we were pumping Ethereum. Okay. Now, again, we're still not out of the woods yet with Ethereum, but we're close. Okay. Ethereum, its breakout. Basically, it hit the 4,200, right? That's important. RSI 78. Ethereum's where things are getting interesting. The 4,200 breakout wasn't retail. Okay. It was systematic funds flipping from neutral to long after 2 weeks of coil and compression. Now, we haven't taken off yet. We're still below it because we had this slight retrace, but that's good. Okay. RSI right now is pushing slightly into overbought, but momentum traders don't care. They don't care about it. Now, the thing with RSI, right? RSI, I know we show it, but I just want to tell you my point, my idea about RSI. RSI was developed by a gentleman by the name of Wells Wilder. I think I mentioned him a couple of times. He passed away, I don't know, a couple of years ago, I think. But anyway, he made RSI famous, but really his best indicator was the average true range indicator. That's really one of his best indicators because RSI itself, you can't rely on it solely, all right? Because in a very, very bull market and a very, very big marketplace, RSI could stay oversold for very long periods of time. And if you're just looking at that indicator and you're selling because RSI is, overbought, you're going to, you're going to go into a death spiral. Same thing when a market is bearish, it could stay oversold for a very long time. So you just don't want to rely on it. So really, momentum traders don't care. They'll ride this, to like 4,450 or even 4,600 before taking profit. So they're in. The momentum traders are in. Now, this chart setup we got, peeps in our trading group got the bank on. I'm going to show you that right here. All right, we had this chart pattern up for them. We talked about it. Frank actually made some analysis on it. He said where to get in. All right, he had he had where he was getting in. He had his stop loss. Some dudes made, one dude said he made 13 grand. Another one says he's got 5,000 still running. So really, just one chart pattern, okay, that we got the peeps in the trading room that really killed it. So we said to them the same support 3 times, triple bottom confirmed. Bulls are not giving up this level. All eyes were on the breakout, right? So the logic was, look, if you buy the level we tell you, it was low risk with a great reward. So, I mean, you would have lost like a couple of dollars. A couple of dollars, yo, you would have lost on it. I had a friend of mine always used to say, let me hold a couple of dollars, yo, and you never get the money back. You never get the money back. But anyway, it would have cost you a couple of dollars, yo. And look what happened. Market took off. So now we got to watch the 4,250, 4,300 like a hawk. We break that level and Ethereum's going to start to fly. So now under the hood, Ethereum, Bitcoin just broke a 4-month downtrend. That's a quiet signal of rotation, okay? It's a quiet signal of rotation. We showed you this chart before. We say Ethereum is following the Wyckoff blueprint to perfection. Spring, test, sign of strength. Every phase is textbook. Explosive markup is incoming. This is where Ethereum is going to shock everyone, and it's going to melt faces. So we told you this as well. Ethereum is following gold. It's mirroring gold's moves. Structure is identical. The momentum is building. Gold ran first. We told you the whole story yesterday about the gold thing, right? And Basel III, right? If you missed that video, go back and watch it. Hopefully you guys did some Googling and, boosted up the knowledge, right? But anyway, gold ran first. Ethereum is just getting started, okay? And here we go. I'm going to say it again. History doesn't repeat, but it rhymes all the way to 10 G's, to 10 grand. So when Ethereum outperforms Bitcoin, liquidity starts leaking into the rest of the market, right? Now, DeFi names, layer twos, and then, the speculative fringe. It's the same pattern that we saw in 2021. But just remember, the pros use Ethereum as a bridge trade, the rotational asset safety between Bitcoin and risk alts. So as long as Ethereum holds, say, 4,000, 4,100, it's bullish. Below that, the air pocket starts to open up pretty quick. All right. Now, as I said earlier in the video in the open, global crypto markets right now are green. If we look at the total capitalization, it's back above 3.9 trillion. That's up 3.3% in the past 24 hours. That's a good sign. That's a good sign. All right, let's get over to good old Bitcoin dominance. All right, and this is Bitcoin dominance. It's tapping historical resistance again. It's sitting right now at 59.81. This is the reason why Ethereum couldn't really spark a big breakout when it went up through 4,002, and it's sitting at 4,001 because it's still in the passenger seat, right? So every rejection sparked the same thing, an altcoin liftoff. We just got to be patient with it. The setup's forming, but literally with Bitcoin dominance, you just got to be patient. Okay, you can't force something, right? And I'm tired of saying it too. Just like I'm tired of saying, history, rhymes and it doesn't repeat, but it rhymes. I get it, all right? But look, all right, before we wrap up, I got to make sure that you're well aware of our trading community. All right, so you come on over to here. I don't know why this is here, but I'm not going to sign in. And you click the link up here. I can't believe I got signed out. Let me see if I can fix this so you can see the link. All right, that wasn't too painful. All right, so right here, you click this link right there, you'll be taken over to our trading community. It's totally free to join. We drop insane alpha trade setups daily, from breakout plays, long-term gens. We talk about macro view there a lot. We also cover Fibonacci in there. Yes, Fibonacci is important. I know there was a comments that, look, macro is very important, but for short-term trading, you got to know your fibs. You got to know your fibs. But anyway, we drop insane alpha, daily trade setups, breakout plays. You want to follow us if you're into, look, you're a lone wolf and you're not into groups. I get it. You want to follow a great broker. You want a good broker. You click right here. WEX, low fees, fast execution. Same thing with BTCC. Now they're offering insane bonuses for new clients. So you want to check them out because you need two things. You need a good charting service. And you need a broker where the bid, offer spread isn't wide, where you could drive a yacht through it. You want tight spreads. Both of these offer great spreads. They're really great. So I suggest you join us right there, level up your trading, and let's stack the profits together. All right, let's move on over to altcoins, where the fun's starting to begin. If we look at good old alts, okay, sideways price, no hype, maximum doubt. That's what it was in December 2020. And it's beginning to feel a lot like December 2020. Back then, 800% followed in 5 months. We're back in the same zone. And liftoff always starts quietly, where you're starting to see the volume is low, the marketplace, there's not much going on in the marketplace, and then boom. So you gotta, act before, other people start believing that it's happening, right? So you want to get in. Now, if we look at it, we got Solana that's up 6, Avex is up 5, INJ is up 4, XRP is up 3. Okay, now the fun part is that we're finally starting to see some rotation, but it's selective on those coins that I just mentioned. They're leading because they got actual liquidity and an ecosystem traction behind them. Look, meme coins, I'm not into them, right? But some people are. Meme coins are still lagging. That's kind of good. You don't want retail euphoria yet. But if we look at the altcoin market itself, it fired a very rare signal. Okay. Only three MACD crosses in 8 years. Each one kicked off an altcoin supercycle. This is where the quiet basically starts to get chaotic. It's before the noise, it's before the hype. Retail is they're not gonna believe it until it's too late. So you got to think of this rotation as like a relay race. Bitcoin needs to hand the baton to Ethereum. Bitcoin is still dominating, right? So it has not handed the baton to Ethereum. Okay. Once it does, Ethereum is going to hand it to the top L1s, and only later do the small caps start to sprint. We're somewhere in between the baton 1 and 2, that sweet spot before the mania like kicks in. Now, you could call it like a velocity rotation. It's when like fast money, confidence is, okay, I shouldn't say it that way. It's not fast money. It's when money's fast, right? The velocity is fast. Confidence is fragile, but discipline is going to actually, pay more than prediction. You need good alts. That's why. You need good utility coins. That's why. Get in our group. We cover that stuff. So if you're trading on your own alts, use tight stops, trail your winners, and really, don't marry those alt charts right now because they're going to cheat on you very, very quickly. They're a bunch of hoes. All right. So right now, anyway. So behind the scenes, all right, as we wrap up, we got Bitcoin. There are two tailwinds that matter right now. First, we got the macro news of, China and the United States easing trade tensions. So that's been the main green light right now for assets. Okay, that's been the green light. Second, the Fed's October meeting. Futures are pricing in a 90% chance of a rate cut by year end. Now, we know lower yields, liquidity injections are fuel for Bitcoin and Ethereum. But we got to keep an eye open because that Powell is a skunk. He is a skunk. He's a skunk among us. All right? If he all of a sudden says something stupidly hawkish, or if that US dollar index rips above 108, 109, we're going to see that risk unwind fast. So we got to be cautious, okay? Cautious. That's the term, all right? All right, guys, that's your crypto rundown for today, October 27th. Bitcoin holding 115, Ethereum holding the $4,000 line. Also warming up. But remember, in bull markets, discipline, not hype, separates the pros from just the passengers. So come on over. Make sure that you join our free trading community. Also, make sure you come on over to X. Follow us on X where we talk about Bitcoin, crypto all day, every day, because we are crypto maniacs. And remember, what do you have to do? You got to trade smart. You got to manage your risk. And if you are a short-term trader, you got to do your own research. As you know, I am a trader, not a financial advisor, and you have to enjoy the party, but dance near the door. I'll see you tomorrow. Cheers.